Yes. So now we are going to discuss practical problems on valuation of shares. So first problem we need to see is on Imami Limited. On 31st March 2015, Imami Limited was as under. So asset side information they have given with the goodwill, fixed asset and current asset side. Liability side, equity share capital is mentioned. General reserve is given. Profit and loss account information is mentioned. 14% debenture is given. Current liability is given. Okay. So, now what are the adjustment to this problem? On the above date, tangible fixed assets were independently valued at 3,50,000. Okay. And goodwill at 50,000. Profit of the previous 3 years is 1,03,200, 1,04,000 and 1,03,300, of which 20% was placed to general reserve. The fair return on the investment in the industry in which the company is engaged may be 18%. Compute the share, value of share under net asset method and yield method. So first thing you need to see the balance sheet. The balance sheet given here the various categories of asset, tangible as well as intangible asset is given, isn't it? So goodwill is an intangible asset, other things are tangible asset. But you know under net asset method we are going to include all at their market value. So whatever given in the balance sheet is our book value. Whatever given in the balance sheet is our book value, and whatever given in the adjustment, see this information, revalued information is given, right? So that is our market value or agreed value. So this value we are going to write. This value we are going to write while preparing net asset method. Then profit for the previous 3 years is given. This information is useful while doing yield method. Yield method or market value method is the right second method. For that purpose, profit for the previous year is given. Why this is given? Because we can calculate AAP, average annual profit. Yes. Then 20% is for place to reserve. Yes. After AAP, you need to deduct 20%. Then you will get profit available to all shareholder. Then this is normal rate of return. Fair rate of return is nothing but normal rate of return. NRR is given in the question. Yes. So you are required to compute the value of share under first two method. So very simple problem. And in the liability side, if you see equity share, general reserve and profit and loss account, these are shareholders fund. These are shareholders fund. That is why you should not take in the net asset method. And remaining two, these are outsiders. Outsiders liability or external liabilities. So these you should consider. So only 14% debenture and current liabilities comes in the liabilities. That is under liability, these two information comes. So now solution part. Very simple. You know the format. In the last class we have discussed about the format. In the books of Imami Limited, you are going to prepare under net asset method or intrinsic value method, value of share. So what is our format? Format is agreed value of asset minus agreed value of liability. That is our format. Agreed value of asset minus agreed value of liability. So first you write here like this you need to do. Then market value of all realizable asset including intangible asset. Like this you can write, or else you can write agreed value of asset. Yes, then you need to make two column. One is inner column and one is total column. Yes. So under agreed value of asset, first one is fixed asset. Whatever given in the balance sheet we need to write. That is all the information comes on the asset side. So first fixed asset information. Fixed asset given in the balance sheet is 5 lakh. Fixed asset given in the balance sheet is 5 lakh, but they said the tangible asset is valued at 3,50,000. So now revalued figure of fixed asset, because tangible fixed asset revalued figure 3,50,000. So this figure we are going to write because this is an agreed value. That is why we have taken 3,50,000 and not 5 lakh. 3,50,000 we need to take. Yes. Now current asset. What about current asset? Current asset, there is no information is given in the adjustment. About adjustment, no information about current asset. Only about goodwill and fixed asset they have said. So it is assumed that current asset book value itself will be the market value. Book value itself is the market value. So same thing. Whatever given in the balance sheet, same amount you need to write if there is no adjustment. So current asset 4 lakh given in the balance sheet. Now goodwill. Goodwill given in the adjustment 50,000, revalued figure, original figure is 40,000. So what you are going to write here, revalued figure, that is agreed value or market value you are going to write, that is present value you are going to write, that is 50,000. So now total of asset. Now total of asset, we want total of agreed asset. So make the total 3,50,000 plus 4 lakh plus 50,000. You will get one total, that is 8 lakh. 8 lakh is agreed value of asset. From 8 lakh you need to deduct agreed value of liabilities. So write less all liabilities including provision for contingent liability. That means any future uncertain liability also sometimes arises because of future uncertain event. So that such liabilities are known as contingent liability. But in this question, they have not mentioned about contingent liabilities. Yes, so you are required to write only external liability. All liability means external liability only and not shareholders fund. These three are shareholders fund, equity share, general reserve and P&L. So you should not write. Only debentures and current liability we need to take into consideration. So debenture value given in the balance sheet is 1 lakh. Same thing you are going to write here. 14% debenture 1 lakh. What about current liability? Current liability also whatever given in the balance sheet 1 lakh 30,000. Same thing you are going to write. Current liability 1 lakh 30,000. So total of liability will be 1 lakh plus 2 lakh 1 lakh plus 1 lakh 30,000. That is 2 lakh 30,000 is the total. So now we know the asset total. Asset total is 8 lakh. Liability total we know 2 lakh 30,000. So finally we want net asset value. How to get net asset value? Asset minus liability. Asset minus liability, that is 8 lakh minus 2 lakh 30. If you do, you will get a net asset. See this. Net asset available. That is 5 lakh 70,000. 5 lakh 70,000 is net asset available to all shareholders. But we want what? Net asset available to equity shareholder. So how to get net asset available to equity shareholder? You should deduct from net asset available to all shareholder amount due to preference shareholder. But whether any preference share information is given in the balance sheet, no information. See this, only equity share capital is mentioned. No preference share capital information is given. If it is given, then first you should write preference share capital deduction. Preference share capital deduction is there. If there is arrears of dividend, that means any arrears or any dividend is not paid for certain years, that you need to write. Then the preference shares are redeemed at premium, that you need to write. That means that you need to deduct from this one. From this information, net asset available to all shareholder, you need to deduct preference shareholder information. But in this question, they have not given. That is why we have taken it as nil, no information, zero. So finally, we get net asset available to equity shareholder. That is 5,70,000. So this is our format. This is our format of net asset method. So now we know the total net asset available. So but what is the formula? Formula value per share is equal to, under net asset method, value per share is equal to net asset available divided by number of equity share. So net asset available we know 5,70,000 right in the numerator. Then in the denominator number of equity share. So what is our number of equity share? What is the share capital? Equity share capital is given for 4 lakh. 4 lakh is the equity capital. 10 each they have said. So 4 lakh divided by 10 if you do, you will get number of share. 4 lakh divided by 10 you do, you will get number of shares. See this. Number of equity share, how to find out? 4 lakh divided by 10, 40,000. So that is about this one, the number of equity shares. So divide now 5 lakh 70 minus 5 lakh 70,000 divided by 40,000. Final answer, that is value of each share or value of single share or value of one share is rupees 14.25. So now we finished with the first method, net asset method or intrinsic value method. So anything you want to ask regarding net asset method or intrinsic value method, you can ask anything regarding this question. You can ask, yes, any doubt. You can unmute yourself and answer, or you can comment in the chat box also. Is any doubt regarding this first method solution part? Have you understood this one? Have you understood? Have you understood this one? Can you tell me? Anyone? Akamsha, Amrita, Ashish, Disha, Harish, Pratish, Kushal, Nishant, Omkar, Rajat, Shefali. Anyone? Any doubt? Amrita is saying no. What about others? I hope no doubt. You are not responding, so I hope there is no doubt. This simple concept is clear. Net asset, asset minus liability, agreed value of asset minus agreed value of liability. So half of the problem is over. Half of the problem is over. Now, second, what they have asked, we need to value the share under net asset method. Now, second one is yield method. Yield value is nothing but market value. So now, second one is statement showing the value of share under yield method. So first step under yield method is average annual profit AAP. How to find out AAP? First you see the question. There are last several years profit is given in the question. So what are those profit? 1,03,200, 1,04,000 and 1,03,300. So we want average of past 3 years. How to get the average? Divided by 3. Divided by 3 if you do, you will get the average. See this, 1,03,200 plus 1,04,000 plus 1,03,000. This is 300. Okay, there is correction. Just correct in the notes also. 1,03,000. This is not 200. This is 300. Yes. So you will get 3,10,000. 3,10,500 divided by 3 because number of you divided by 3. So now we got average annual profit. What is our average annual profit? 1,03,500. That is our average annual profit. From that we need to deduct certain adjustment. What are those? One is tax. If there is any tax is given, that we need to deduct first. Then after tax, if there is any reserve, that we need to deduct. So less deduction, less appropriation towards taxation and reserve. In this question, there is no information about tax rate. Tax rate is not given in the question, so it doesn't matter. But reserve rate is given. See this, what is the reserve rate? 20% was placed to reserve from the average profit. So from the average profit, take 20%. How to take 20%? 1,03,500 is average profit. On that, take 20%. So you will get the reserve amount. What is the reserve amount? 20,700. So deduct from 1,03,500. You will get profit available to all shareholder. Profit available to all shareholder, that is 82,800. But we want profit available to equity shareholder. I have already told we are doing the calculation for equity shareholder only and not for preference shareholder. So we want final amount. How to get final amount? From profit available to all shareholder, deduct fixed dividend only. But in this second method, market value method or yield method, we are concerned about only dividend. Even if preference share capital is given in the question, in the second method, only dividend information we are going to write. So here no preference share information at all. So nil. So nil, zero. So profit available to equity shareholder is 82,800. Yes, this is final total. But what is the formula? Next step is we need to find out capitalized profit. So how to find out capitalized profit? For that there is formula is mentioned. Profit available divided by normal rate of return into 100. See this formula? Capitalized profit is equal to profit available to equity shareholder. That is nothing but this amount, final amount 82,800 divided by normal rate of return. Normal rate of return is given in the question. Where it is given, see this, the fair return on investment in the industry in which company engage may be 18%. That is means every year there may be a actual return of 18%. Okay, so that 18% you need to write it here, normal rate of return, but you should ignore the percentage and only write the amount. That is only write the figure. See this, only 18 you should write and 18%, that percentage you should not write because here 100 is given, multiplication into 100 is given. That is why only 18 you should write. So 82,800 divided by normal rate of return, that is 18, into 100. So what is our answer? Capitalized profit is 4,60,000. After finding out capitalized profit, we want value per share. How to find value per share? Same thing, same procedure. How we got value per share under net asset method? That is net asset available divided by number of equity share, value per share under net asset method. Now under yield method also, capitalized profit divided by number of equity shares. See this, value per share is equal to capitalized profit divided by number of equity shares. So what is our capitalized profit? Just now we got answer 4,60,000. So 4,60,000 divided by number of equity shares. Share capital is given in the question, I told 4 lakh, and that face value is given, that is 10. So how to find out number of share? We have discussed in the net asset method. That is 4 lakh divided by 10. If you do 40,000, that is number of equity share. So 4,60,000 divided by 40,000, value per share under market value is 11.50. Okay. So this is how we are going to solve the problem. This is under second method. First method, see this 14.25. In the second method, answer is 11.50. Yes, we have finished. We are done with first problem. Yes. Anything you want to ask regarding this first problem? Any doubt regarding first problem you can ask now. Any doubt regarding the first problem? Very simple problem. If you compare with previous chapters, very simple chapter is this one. Yes. Anything you want to ask about this one? Valuation of share, methods, net asset methods, then market value method, yield method, fair value method. Yes, but in this question they have not asked about fair value. That is why we have not done fair value. Fair value is nothing but average of first two method. That is intrinsic value plus market value divided by 2. If you do, you will get fair value. Yes. So any doubt regarding this? No doubt, right? Any doubt you can ask me now. Unmute yourself or comment in the chat box. Anything? Kushal, are you having any doubt regarding this one? Nishant, Isha, Akamsha, Pratish, Amrita, Sifali, Omkar, Rajat. Yes. So very simple. So now second problem, similar type of problem we need to discuss now. Second problem. See this. Next one, problem number 2. Problem number 2. Chetak Limited. Chetak Limited problem. Similar pattern problem is given. The following is the summarized balance sheet of Chetak Limited. So asset side. Asset side, again intangible and tangible asset. Intangible asset, goodwill is given. Fixed asset and current asset is mentioned. Preliminary expenses. Here preliminary expenses are fictitious. Fictitious assets we should not include. So preliminary expenses does not come under net asset method. Very clear. Preliminary asset does not come and all other things comes including goodwill. Yes. As liability side if you see, shareholders fund. Again, shareholder fund means share capital, reserve fund and P&L. That doesn't come. Then external liability. That is debenture and current liability. These two information comes in net asset method. Yes. Now we need to see the adjustment. For the purpose of valuation, shares, valuation of shares, fixed assets were valued at 5 lakh. Okay, so what is the original value given in the balance sheet? 4 lakh 50, but here valued at 5 lakh. So you should take 5 lakh. Agreed value you should take. Goodwill 1 lakh is given in the question. In adjustment they have given 1 lakh 50. So while preparing net asset method, you should take 1 lakh 50 and not 1 lakh, because agreed value or revalued figure or market value or present value you should take. Yes. Now next adjustment they have said. Then there is a necessity of RBD. RBD means what? Reserve for doubtful debt. At 10% on debtor of 75,000. But debtor information is not given in this question. So from where debtor comes, can you tell me now? Where debtor comes in this goodwill, fixed asset, current asset? Whether debtor comes in fixed asset or current asset? Very simple. Can you tell me now? Where does debtor come? Under which category? Whether it is a fixed asset or it is a current asset? Can you tell me now? Debtor. Yes, current asset. Amrita is saying correct. Correct. See this. Debtor, that means debtor is included in the current asset. Okay. So there is an adjustment for debtor. What is that adjustment? You are required to prepare reserve for bad debt on debtor worth 75,000. So on 75,000, if you take 10%, you will get reserve amount. Yes. Next one, if stock, there is one stock was overvalued by 9,000. It was found that stock was overvalued by 9,000. Again, stock comes in current asset. They have not given specifically, in the generally they have given. Current asset includes debtor also, current asset includes stock also. So stock overvalued by 9,000 means suppose the stock value is 1 lakh, let us assume stock value is 1 lakh. Now it is overvalued. That means now it is overvalued by 9,000 means total is 1 lakh 9,000. So there is an excess amount. Whenever there is an excess amount, we need to deduct. When there is an overvaluation, we need to deduct. When there is undervaluation, we need to add. Overvaluation deduct, undervaluation add. So in this case, overvaluation, excess amount we need to deduct. Yes. Next, the net profit for the 3 years 69,000, 71,800 and rupees 90,200 respectively. This is after taxation. But now we want before taxation. Before taxation, how to find out? We need to follow the second method, that is yield method format. So whatever we are doing in the yield method, that we are finding out the amount before taxation. How to find before taxation? First you need to find average profit, average of these. Then from that you need to deduct tax and reserve. Yes. Taxation information is not given in this question. That is the rate of tax is not given. Yes. Out of this profit, 20% placed to reserve. So from A, B, take 20%. The proportion is being considered as reasonable in the industry in which company is engaged and the normal rate is 10%. This is nothing but NRR. Normal rate of return is 10%. You are required to value the share under all three methods. What are our all three methods? Net asset method, yield method and fair value. Okay. So this is our problem. Now we need to find the solution. How to start? Now first one, net asset method. Before that certain notes are given. See this. First one, debtor 75,000 included in the current asset. We have already discussed this one. Stock which is included in the current asset should be reduced by 9,000. Why? Because it is overvalued. There is excess amount. So first step, computation of net asset method. Statement showing value of share under net asset method. First one, you know what is the format? Agreed value of asset minus agreed value of liability. So first you write market value of all realizable asset including intangible asset. Two columns we should do addition to the particular column. First one, fixed asset. What about fixed asset information? Fixed asset information given in the balance sheet 4,50,000. In the adjustment they have said 5 lakh. So we should take 5 lakh agreed value. So we have taken 5 lakh. See this. Fixed asset 5 lakh. Similarly, goodwill. Goodwill 1,50,000 we have taken because it is given in the adjustment 1,50,000. In the balance sheet, original book value is 1 lakh. Given in the adjustment, that is market value 1,50,000. We should take market value 1,50,000. Yes. Now current asset, there is an adjustment. Current asset. So total current asset. What is the total current asset given in the question? 1,90,000. See this. 1,90,000 is a total current asset. From that we need to deduct certain things. What are those? One is bad debt. One is bad debt. How to deduct bad debt? 75,000 is debtor they said in the adjustment. So from 75,000, 10% reserve for RBD. So 75,000 into 10% if you do, 7,500 you will get. So from current asset minus bad debt amount, that is 7,500. Okay. So that is 1,82,500. Again there is one more deduction. What is that one more deduction? There is stock overvaluation. So that you need to deduct 9,000. So 1,82,500 minus 9,000. So final amount in current asset, remaining amount after deduction is 1,73,500. This is very, very important, very clear now, this one, current asset. So now, any other information in the asset side, they are not given. Preliminary expenses does not come because it is fictitious. It doesn't come. Yes. So, now total agreed value of asset. How to get the total value of asset? 5 lakh plus 1,50,000 plus 1,73,500. Total of asset is 8,23,500. From this, deduct liability. How to deduct liability? All liabilities including provision for contingent liability. So only two things except for shareholder fund, that is debenture, directly given in the question. 1 lakh. So deduct 1 lakh. Then current liability, directly given in the balance sheet, liability side, 1,30,000. So less agreed value of liability is total is 2,30,000. That is nothing but 1 lakh plus 1,30,000, 2,30,000. So from asset you deduct liability. Asset total 8,23,500. Liability total 2,30,000. If you deduct, you will get net asset. So net asset available to all shareholder is 5,93,500. Preference share information, whether it is given in the question, they have not mentioned. So nil. Minus preference share, payment to preference shareholder, that is nil. Amount due to preference shareholder, nil. So final amount net asset available to all shareholder, that is 5,93,500. So now we know the formula how to calculate value per share under net asset method. That is net asset available divided by number of equity share. Net asset total we got just now 5,93,500 divided by number of equity share. What about number of equity share? That is given in the question. See this 4 lakh is given in the question. 4 lakh 10 each. Face value is 10. Okay, 4 lakh divided by 10 if you do, you will get number of equity share. Same thing, 4 lakh divided by 10, 40,000. So 5,93,500 divided by 40,000, you will get value per share. Each share is worth of rupees 14.83. So this is about net asset method. So now we have done one part of the problem. So now second step is yield method. They said yield method calculation. So yield method we want AAP, average annual profit. See this statement of the value of share under yield method. AAP, average annual profit. Where this information is given, previous year profit is mentioned in the problem. See this net profit for all 3 years 69,000, 71,800, 90,200. So we want average. How to take average? There are 3 years, so divided by 3. 69,000 plus 71,800 plus then 90,200 is equal to 2,30,000. 2,30,000 divided by 3, if you do, you will get average annual profit, that is 77,000. From that there are deduction of tax and reserve. There is no information about tax, so only reserve. How to take reserve? From average profit. Average profit we know 77,000. From 77,000 take 20%. You will get reserve fund. What is a reserve fund? That is 15,400 kept as a reserve from profit. Yes. So from AAP deduct reserve, final amount is profit available to all shareholders. That is 61,600. 77,000 minus 15,400. From that you need to deduct a dividend. But in this question there is no information about dividend. Fixed dividend payable to preference shareholder, nil. See this nil because no information is given. That is why profit available to equity shareholder is 61,600. So this is the final amount. So now what is the formula for capitalized profit? Capitalized profit is equal to profit available to equity shareholder divided by normal rate of return into 100. See this. So now this formula we need to apply in order to find out capitalized profit. Profit available divided by normal rate into 100. Profit available just now we got, that is 61,600. See this. Divided by normal rate of return. Where normal rate of return is given, here they have mentioned. Fair rate in the industry, that is 10%. So we need to write in the denominator 10. In the denominator we need to write 10. See this. 61,600 divided by 10 into 100. You will get to capitalized profit. 6,16,000. Yes. Now value per share, how to calculate? Capitalized profit divided by number of equity share. Capitalized profit divided by number of equity share. So capitalized profit information just now we got 6,16,000 divided by number of equity share, that is 4 lakh divided by face value 40,000. So answer is 15.40. Each share worth of 15.40 under market value method. So last method is fair value. Now we have discussed net asset method, then market value method, now final fair value. What is the formula for fair value? It is the average of first two methods. We have already discussed this one. See this. Statement showing fair value of share, fair value of each equity share. So first two method average, intrinsic value or net asset method plus market value or yield method divided by 2. That means First two method answer you need to write in the numerator. So first method, intrinsic value. What is the answer of intrinsic value? Once we see the intrinsic value answer, see this 14.83. So that answer you need to write here, plus market value answer. Market value per share answer we got 15.40, that we have written, divided by 2. So we got average, that is nothing but fair value, that is 15.1. 15.12 is our fair value. So this is how we are going to solve this problem. Yes, that is problem number 2. Yes, any doubt regarding this?